Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is your favorite show, Daily Calls, a show that answers all your stock-related queries on the program. In case you're here for the first time, well, the WhatsApp number is flashing on your screens. This is where you send me all the queries that you have about the stocks in your portfolio or onto your watch list. I will have top market experts guide you through your stock queries over the next 45 minutes on this show. Remember, you can also watch our show live on YouTube and go to the comment section there of the live daily calls and send me your questions and I'll be happy to address those queries as well with our top guests. First up, let's look at how the markets are taking shape. Well, at half time, 25,822 is where we are at as far as the Nifty is concerned. We have the metals, oil and gas, autos, real estate stocks still hovering higher, but the picture turns weak when it comes to IT, PSU banks, also mid caps and small caps, financial services. They are the ones that are still falling behind. So 25,819, about a 19 point of a dip, and across the board just about a muted trade is what you see. On the Nifty, however, you have names like Eicher Motors, Hindalco, HDFC Life. You also have names like Mahindra and Mahindra and NTPC as among the names that are hovering higher by 1.5% odd in the trade as well. Let's also look at the top gainers in the Nifty 500 basket. Look at the top listing today. Meesho still hovering about 53% higher after that robust listing today. We're also looking at names like Akshopti Fibers, 15% higher, Tips Films. You also have AQS Limited, which is another debut stock in trade today, another 14% higher for this one as well. Apart from this, you have State Trading Corporation, you have names like even Uttam Sugar Mills, Venky's, that's also up and about in trade, MIRC Electronics, many such names that are hovering higher in double-digit names that we see at this point in time. Let's actually welcome our guest on board. Mr. Akshay Bhagwat is now joining in. He's the Senior Vice President of Derivatives Research at JM Financial to guide you through the markets and through your queries as well. Akshay, warm welcome. Good afternoon to you. Good to have you with us. Tell us, how are you looking at the markets? The sentiment on the index level still continues to be pretty muted and volatile over the last couple of sessions. In the morning, we were hoping to see a ray of light and be in the green, but again we are seeing a volatile mood at this point in time. A lot of stocks, however, in the Nifty 500 basket are making their own, charting their own trajectory at this point in time. But what would you say at this point? What's the focus point in the markets?
Good afternoon, Sakshi, and to all the viewers. Well, see, if we were to look at the broader market picture and the index per se, it paints a different picture altogether because last few days of action, there has been some resistance in the Nifty index at the levels of 26,300. There has been some bit of a weakness which we have seen in the top heavyweights. But if you see the broader market picture, there has been a lot of intense weakness or selling in the mid and the small cap space. So that's the pain point for the market. And since the index heavyweights and the small caps are not going in tandem, it's not so good news on the street. So if I were to just look at the index, then 25,700 is an immediate support, an important level before the Fed event, which would be out tomorrow morning. But overall, the way things are slowly shaping up for the Nifty index, probably there can be some weakness in the month of December going by the data and the price setup on the technical price charts.
Okay, all right. Akshay, we will kickstart by discussing all the questions that are coming in for all our viewers now. We have a lot of our viewers who are joining in early on the show on our YouTube. We have Anuj Singh, we have Preetam Singh joining in. We also have Sandeep Pancharya, Aarti Jain, Anuj, as well as Sheetal Agarwal. Welcome to all of you who are joining in early on our YouTube channel. A lot of questions also coming in on our WhatsApp. So let's kickstart by taking some queries, and we can of course keep coming back to Akshay to discover some more themes that you could be looking at this point. First up, we have a question from Anuj Singh who says, I want to know about Vedanta. इसका शेयर इनके पास 266 के रेट पर है, 500 शेयर्स खरीदे हुए हैं और एक साल तक के लिए आपसे इसका टारगेट जानना चाहते हैं कि वेदांता पर अगले एक साल में क्या एक्सपेक्ट कर सकते हैं।
जी देखिए वेदांता पॉजिटिव ट्रैक्शन हमें गए 2 दिन से दिख पा रहा है और ओवरऑल अगर थोड़ा लॉन्गर टर्म चार्ट स्ट्रक्चर भी देखें तो काफ़ी पॉजिटिव मोमेंटम गए 4 महीने में इस स्टॉक में देखने को मिला है। तो कहीं ना कहीं प्राइस एक्शन थोड़े एक साल के टाइम होराइजन से देखें तो 420 ही आपका एक स्ट्रॉन्ग टेक्निकल सपोर्ट पॉइंट बन रहा है और जिस तरीके का ओवरऑल प्राइस सेटअप है मेरा मानना है कि शायद 600 पार कर जाएगा 1 ईयर प्लस के टाइम होराइजन में। तो होल्ड करने की राय रहेगी फॉर टारगेट्स ऑफ 600 प्लस।
आगे बढ़ते हैं नेक्स्ट क्वेश्चन की तरफ और ये हमारे पास क्वेश्चन आया है एक हमारे व्यूअर का अगेन हु इज वाचिंग आवर शो ऑन आवर यूट्यूब वी डोंट हैव हिज नेम येट but he says good afternoon Sakshi, what's the outlook on NBFCs like Poonawalla FinCorp and M&M Finance if I have to look at for the next 1 year? I'm actually still holding both these stocks on about 40, 50 to 60% kind of profits, so I want to know what is the future outlook on both these. Well, first up, congratulations, you're holding both these stocks at a good amount of profit of 50-60%. Let's find out over the next 1 year, will you have the opportunity to build on to your profits, or should you partially book your profits right now? Akshay, what would you advise?
See, it's a mixed chart which I see in case of both M&M Finance and the other stock which we spoke of. So first of all, take M&M Finance. See, technically, as of now, the stock is positive. It has staged up a breakout last month with good volumes at the levels of 320. This month, there is a small bit of weakness which I see on the higher levels. So as of now, the suggestion at least for M&M Finance is to continue to hold with revised stop loss below 300. In case it gets below 300, you are advised to take at least half the profits off the table. And I think if you look at Poonawalla FinCorp here, there is a slight question mark in terms of a 1 year time horizon because the stock has resisted at the levels of 500 on the monthly charts. It's a double top pattern, which is a slightly cautious approach for the year ahead. And the chances are that if there is some profit booking or weakness in the coming days, you might see the stock going below levels of 400. So at least in Poonawalla FinCorp, it is better to take an exit. In M&M Finance, you can continue to hold with the revised stop loss as suggested.
Taking the next one, we have this question coming in from one of our viewers, Aarti Jain. She says, hello sir, I want to know about two stocks, Ashok Leyland from the auto space and IRFC from the railway space. Can I make a fresh entry in both these stocks? She wants to know from you. How would you advise this? We don't have Aarti's viewpoint as to whether she wants to invest in it for a long term or what is the time horizon yet, but any suggestion on both these stocks right now?
See, IRFC is a weaker name. Ashok Leyland is a positive name in terms of the price expected action. And first of all, taking up on IRFC, 100, that is the support zone which you need to look at. But considering the weak technical structure, the advice would be to stay away at the current zone. It is better to invest in Ashok Leyland where the broader price structure promises a strong upside going ahead from a minimum 1 year plus time horizon. So technically a healthy uptrend is in place in Ashok Leyland. 140 is the immediate support which is building up a strong base, and I think the stock is most probably setting itself up for targets of 190 to 200 from a 1 year plus investment horizon. So Ashok Leyland is a preferred choice among the two.
Okay, let's take the next question, and this one is from one of our viewers. Again, this is from our YouTube viewers, who Sandeep Pancharia. He actually wants to know from you on one of his positions where he's actually feeling stuck and in fact is also on losses, and wants to know from you what is the ideal way to move forward from here on the same as well. So this is VPRPL, Vishnu Prakash R Pungalia stock. That he is sitting at a loss because he bought this stock at 250 levels, and right now the stock is at 73. So you have actually faced quite a bit of downturn on this stock. Last 6 months alone, we've seen, or year to date also, 75% of the value has got eroded from Vishnu Prakash R Pungalia. And this stock, in fact, if you would have invested right in the beginning of this year only, it was at 250 odd levels, and from that time it's only seen a slide downwards. What would you advise Sandeep, Akshay here? Should he book out?
Yeah, absolutely. On the technical price charts, I don't see any price support emerging. It's been a one-way slide for the stock, and that just continues to deepen with every month passing by. So as of now, I do not see any hope, or I would not sell hope rather, because technically it is weak. In case there is a bounce back, we will review. But as the data goes right now, it's an exit, even for trading or for medium term or long term.
Okay, I hope this has answered your question. Viewers, we will just help you with the breaking coverage that we are showing on our channel as well. And this is with regards to the US trade deal. Remember, the US trade representative Jamieson Greer has now confirmed that a dedicated American team is currently in India, already negotiating the potential trade deal. He's testified before the Senate Appropriations Committee, and he has said that India remains a tough nut to crack on US farm exports, especially crops, meat, and dairy, but has also noted that New Delhi has been more forward leaning than ever. Let's actually listen into what he had to say, and then we will jump on to understanding what this would mean for India's import exports and the trade deal.
You mentioned India. I have a team over there right now as we speak in New Delhi working on this. There's resistance in India to certain row crops and other meats and products. They're, like you said, they're very difficult nut to crack. I agree with that 100%, but they've been quite forward-leaning. The type of offers they've been talking to us about have been the best we've ever received as a country. So, I think that's a viable alternative market.
All right, so this is for the first time that we are hearing from a US representative, especially the US trade representative, Jamieson Greer, who's pointed out where the deal is getting stuck. Remember, we've been waiting for months to hear from the US government to finalize a trade deal with India. Remember, earlier they had been imposing higher tariffs on India just to penalize India, also from being a large importer of crude oil from Russia. Now that over the last 1 month, you've been seeing statements, you've been seeing from top oil importers back home in India, including Reliance Industries, that they're shifting out of reliance of Russian crude oil and in fact exploring newer avenues for importing their oil as well. But at the same time, Jamieson Greer has said that India is a tough nut to crack and that we are not bowing down to the kind of demands that US has put as far as the farm exports are concerned, especially crops, meat and dairy. Remember, this is what our own government, even Prime Minister Narendra Modi, had very categorically said that we will not bow down and we will have everything to do to protect the farmers back home in India from any sort of a pressure tactic that the US is adopting at this stage in time. So finally a statement coming in that it is the farm products, it is the crops, it is the dairy, it is the meat where the deal is currently even stuck at this point in time. The US trade representative and the entire team, the US trade team is in India right now negotiating the trade deal, but these are the key points where it is getting truly stuck at this point. Let's go across to Akshay. Akshay, seems like, the markets also have been extremely volatile and cautious. And the one consensus statement that I have heard from most of the analysts is that once there is more clarity on the US-India trade deal, markets will be in a better shape to probably chart a clearer path for themselves, because this uncertainty has continued to loom large all through this year of 2025, right from April all the way up to December. 90% of the portion of the year has actually gone into just understanding and decoding the statements that are coming in from the US on the trade deal.
Yes, I completely agree. I think it's been last couple of months that markets is just clinging on to hopes that there will be a breakthrough in the India-US trade deal, and the tariff structure might improve, and that would be the next level of impetus for the Indian markets. But unfortunately, nothing is clicking through. There are discussions which are on until the clarity emerges. Really, it is just hopes which are keeping the market afloat. But the broader market picture, as I said at the beginning of my commentary, is not painting a bright picture. Clearly, there is selling intent, there is profit booking or exit, which is noted in the small and the mid cap space. So maybe the initial cues are that no breakthroughs are coming through. At least the confusion which has been extending too long and too far is playing now on people's minds as we near the end of 2025. So it's a difficult decision. Clarity will emerge once we get to know as to how exactly things emerge. But since we are talking about farm sector, which is something very close to every Indian heart, so I think decision making on that will be tough, and making breakthrough so fast will not be an easy approach. So I think it's better that you need to have your risk management in place, especially if you are facing such a big mega event.
Okay, let's also focus on some more questions now, Akshay. We have Tapan from Kolkata writing, Namaskar Sakshi ji, Namaskar, aapko bhi Tapan. Likhte hain, absolutely no power in NTPC. What should I be doing? Should I buy, sell or hold? Well, we don't know your existing positions, so it will be difficult to comment on the selling part at this point in time. But we'll definitely take an overview from Akshay on NTPC. And you rightly did point out that this entire year, we've actually not seen a substantial move on NTPC. Remember, 2024, in fact, turned out to be a really powerful year for all these power producers and power distributors at large. Power was a clear theme for about 2-3 months odd or so. But this year, there has not been any kind of a zing that we've seen in the power majors like NTPC. Akshay, what would you say?
Absolutely, there is no fuel and it is not running on power, as the question rightly said. What I can say is like 8 months it's been in a range, so it's just pivoting around 325. So technically, it's the setup is neutral, and unless you have a scenario where it breaks the support, it's difficult to call it curtains for the stock. So at least 300 is the last saving grace for NTPC. If you have the stock in your portfolio or you have a positional view, then maintain a revised stop loss approach where 300 or below is where you take an exit call on the stock. So right now it's just a hold on an anticipation that the range play continues, and you might have a scenario where 360, which is the upper end of the band range, is tested. So hold, but with a stop loss below 300 is the recommendation on NTPC.
Okay. Taking the next question, Chandan Jain from Hubli, Karnataka says, Sir, I have NCC 1000 shares at 250, but now the stock is at a 52-week low. What should I do?
See, the chart setup is weak, and it has also broken below its prior swing low of 170 on the monthly charts. So right now, the way the prices are unfolding, I think 125, 130 can be the immediate downside. It's been a one-way sell in the last 5 weeks from 220 to 160. So it's an exit for me if your trades are from a short to medium term view.
Okay. Next, we have a question coming in from Vivek from Kerala. He says, my question is on Ganesh Housing. I've started to accumulate this stock at around 850 for 1 year time frame. What would be a good level to continue to add more?
Uh, See, technically the support zones are emerging somewhere around 700. So we are almost 100 points away from where the support zones lie. So the question is whether the stock reverses from the current zone, or you have one more dip scenario near 700 before there is some good recovery in the stock. So the buying levels, if you want to average it, you need to distribute your buying in tranches all the way from the current market price till 700. I think the best way is to distribute it in three tranches. Current market, you invest 30%. On a dip around 775, you invest the rest 30%. And the last case, or the worst case scenario, dip to invest would be 700. So this is where you average it out. Worst case stop loss will be below 650. And in case you have a recovery scenario from a long-term perspective, potential target zones can be around 1100 plus.
Okay, let's move on to looking at the next question then. And a lot of our questions are coming in from our YouTube viewers as well. So let's straight away dive in. We have Sheetal asking, Sir, can you please help me understand on Bank of India, what is your outlook on this stock? Now, we do remember about 1.5 months ago, the PSU banks have been in thick flavor. There was a lot of momentum there. Sometimes even now in periodic fashion, we do see a momentum in the PSU banks. Of course, there are a lot of triggers that are awaited. One is the merger, consolidation in the PSU banks. The second one is the increased foreign ownership that is also in the works probably. How would you look at a Bank of India thereof?
See, Bank of India, I think longer term picture would shape differently, but at least from short term perspective, the stock has tested its key resistance zones near 150. That's the reason you are seeing some bit of selling pressure in the stock in the last few trading sessions. So the resistance I speak of is more short to medium term in nature. So you might have a temporary sideways or a consolidative phase, but since you are keen on the long term prospects of the stock, so as the broader price reading goes, it's a hold. Your technical levels would be a support of 100. The momentum would catch up whenever the stock would breach levels of 150, and in case it does, then you can look forward for targets of around 225 to 250.
Okay, got that. Let's take the next one then. We have this question coming in from one of our viewers, again on our YouTube. Vinita Gupta says, good afternoon, Sakshi. Can you please help me with partial profit booking levels in State Bank of India and Bank of Baroda, also in PNB and Canara Bank before a dip comes in again? So in continuation with the PSU banking story, the next question has come in for our viewer, Vinita, who's big on the PSU banking story. So she has investments in SBI and Bank of Baroda, in Canara Bank, in PNB, and wants to know, before the tide turns, when is the best level to start booking out partially?
I think, see, if you're timing it from a short-term trading perspective, at least stocks like a Canara Bank, a Bank of Baroda, and Punjab National Bank, all these three stocks have overstretched on technical trading parameters. A couple of the stocks like a Bank of Baroda and Canara Bank have almost tested their prior or the all-time swing highs, from where we have seen some bit of a profit booking. So I think it makes a lot of sense that if you are keen on timing the trades for short term, booking out profits in Canara Bank, Punjab National Bank, and Bank of Baroda makes a lot of sense at the current rates. State Bank of India is an exception because right now it's neutral price structure, so there might be one more round of upside. So here in State Bank of India, I would advise a revised stop loss approach of 940. Continue to hold State Bank, 940 is your stop loss, and around 1020 is the profit booking level.
Okay, fair point. I hope this has also helped you out. Let's take the next question then. This one is from, again, one of our viewers on our YouTube, Govind Bhatia. He says, Sakshi and Akshay sir, good afternoon to both of you. I want to know about Fortis Healthcare. Can I buy it at the current market price for the long term? Would you advise the same, Akshay?
See, long term would be a different story here in Fortis, because right now, as I understand, the stock is sliding one way from 1100 to 860 is what the journey is of the stock has been in the last couple of months. So somewhere you can anticipate a trading bounce once it reaches near the levels of 800, maybe 840, where the 200-day moving average support is. You can see a trading bounce. So too early to call it long-term investment, but potential zones from where technically I can anticipate some pullback in this stock would be levels of 840. That's more of a trading support, and 800 would be a key or a pivotal support zone which would decide the future in terms of an investment perspective. So keep these two supports in mind. Calling it investment at this stage is a bit too early, because we need some confirmations in terms of price support formations, and then we will accordingly review and give you a view on this.
Okay, got that. We have also one question coming in on our WhatsApp. This is from one of our viewers who's writing in, Gul from Kerala. She says, sir, can I buy ITC hotels for next 1 to 2 years, and when can I make a fresh entry?
Again, ITC hotels, longer term picture is different, and short term it's prone to some more weakness. So technically, if you were to time this, what is the best way to buy is a question. Then probably the support zones where ITC hotels is attractive from a technical viewpoint would be levels of around 180. So we are at 197. So wait for 10-15 rupees fall more. That's the point where you gradually start nibbling or buying in tranches in the stock. So roughly 180 plus minus 5 to 10 odd points. 180 roughly is the point where you start buying ITC hotels. That's the call from where you can expect some reversal.
Okay, next we have Krishna from Hyderabad writing in on our WhatsApp and says, hi Sakshi, I've got the allotment of Meesho. I want to know what is the short-term strategy that I should adopt. Well, Meesho has just got debuted today, and you've actually got over 50% kind of a rally. Right now also the stock is trading 53% above the issue price. So at 170 odd levels. First up, congratulations to you, Krishna, from all of us here. You know, these days it's extremely rare to get an IPO allotment, and even rare, even more rare is the fact that it actually gives you a very robust listing gain. So you've got an entry into the right kind of an IPO, you got the allotment, and now you have over 50% profits also on just day one. You've asked for a short-term strategy. There are no charts for Akshay to study, but maybe he can just give an overview here.
Honestly, it's very difficult. I do not personally track this stock, so I would not be able to comment on it.
Okay, we will maybe toss, Krishna, your question to another guest who joins in to get you a fresh view on Meesho, but do accept our congratulations on this seller profit on just one day of gain in the stock markets. That's the magic. If you get into the right kind of a stock, even one day is enough to make 50% profits on what your investments are. Let's look at the next question. This one is again from one of our viewers. This is Ratna Prabha. She says, hi Sakshi, good afternoon. How are you? I'm very well, Ratna. Good to hear from you. The question is on Keynes Technologies. Remember, last 1 week entirely has been a one where we have seen a lot of cuts on Keynes Technologies. There was a lot of nervousness from investors' side as well. Slow gradual recovery is coming to shape, but let's find out on Keynes. What's your suggestion, Akshay?
So 3700 is the trading support. You can anticipate some trading pullback. Too early to call it investment bet, but you can anticipate some bit of a trading pullback from the levels of 3700. So keep a stop loss of 3500, not in investment or positional recommendation, just to trade some pullbacks till 4500 is the call. That's the trade I see in Keynes at the current levels.
Okay, got that. Let's also look at the next query. In fact, now we'll go forward to understanding, Akshay, your own choice of stocks. In fact, before we let you go, which stocks would you recommend right now?
So right now you can look at Vedanta. I think Vedanta is positive on the charts, and here 575, 580 is the target you can look forward to. 500 would be the support. In the current market conditions, I would only recommend one buy call of as of today.
Okay, got that. Thank you so much then, Akshay, for being with us on the show and for helping all our viewers out with all their queries and, of course, and helping us get an overview on the markets as well. It's always a pleasure to have you with us, and we enjoy your company, and so do all our viewers as well. Thank you so much for coming in. All right, viewers, let's quickly take a look at how the markets are taking shape before we welcome another guest on our show. We have 20 points lower on the Nifty right now, 25,817. So we have slipped lower after a lot of choppiness that has spanned out. We are at 12:30, which is truly half time in trade. And by half time, we've already seen a lot of volatility. And we are also seeing that the Nifty has now slipped to the day's lowest point. 25,818 in front of you right now. Let's actually look at deeper into the markets. Where is the pain emerging? On the Nifty, where the pain point is Indigo continuously, now 2.2% lower at 4,853. Remember, we constantly have a lot of statements that are coming in that the DGCA and the PMO have both had a meeting, and therefore they are also mulling that strict penalties should be imposed on Indigo so that such instances are not repeated, and therefore you can see a subdued sentiment there. Eternal continues to be weak, 2% lower. You also have heavyweights like HDFC Bank, Bajaj Finance. Also in a weak zone today, Axis Bank is lower, JSW Steel, Apollo Hospitals. These are all the stocks that are on a lower end. On the flip side, you have Eicher Motors, you have Hindalco, you have HDFC Life, you have M&M, Tata Steel, Adani Ports, as all the stocks that are actually buzzing in trade right now. When we look at the sectoral picture, well, you do have the metals that are actually going pretty strong, and that's reflected in names like Hindalco, Tata Steel also pulling up in trade on the Nifty. The metal story is going strong, 0.8% higher. There's also a half odd percent of an uptick on the auto space. You have Eicher Motors that's up, you have M&M that's higher. You also have names within the auto ancillaries that are pulling up pace. Oil and gas also, some of the names that are pulling up in trade are in fact buzzing in the broader markets. GAIL, IOC, you have HPCL that's buzzing in trade, BPCL, PSU oil and gas names are also doing well. Real estate and pharma are also doing better at this point in time. But let's welcome our other guest on board and get into the second segment of the show. Mr. Rudra Murthy from Watchtower Investments is now joining in on the show with us, and he's another favorite on Daily Call show. Warm welcome to you, Rudra. Good to have you with us. Help us first understand your view on the markets. Well, we are still awaiting a Santa Claus rally. We did see just very briefly those record levels, but again, the selling pressure has mounted on top. What would you say?
Sakshi, good afternoon and thanks for having me in the show. Let me be very crystal clear on my view right at the top. Flexibility is the key if you are a very short-term trader, and I am very cautious on market. Good that you are having this particular program and you have Rudra here as the guest. And let me tell it very clear to all your viewers that I am very cautious now on this market, and let me tell you why, both fundamentally and technically. Now, first of all, if you see this quarter results, what has already gone by, it was fabulous, far better than the previous quarter. Business updates, very good. Even if you see the Bihar election results, where the NDA results were somewhere at around 208, if I am not wrong, no one expected. Market expectation was 140, 150 seats for NDA, and they went to 208. Look at GDP numbers. 7.5% expectation, and what actually came was 8.2%. Look at even the interest rate cut by RBI in the recent meeting. On top of all these things, markets are not going up, and we have hugely underperformed. So for me, what screen is telling in the very short term is, yes, FIIs have been continuously selling, and they know something which I and you may not know today, but we will get to know it later. And let me also tell you, rupee having depreciated against dollar and above 90, what it is consistently trading, that is not a good sign. And most important, that tariff deal from Trump has never come. Yes, there are meetings happening, and then there is a troop of people from US Commerce Ministry coming here discussing blah 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 blah. This is happening for too long now. And even today, if you get this meeting done, even if Trump gives you the tariff deal out, I don't think so market will rally, because all the positive fundamental news is not reflected on the screen. So for me, what is very important is two things. Number one, rupee has to come and trade below 89, and only then I will be convinced that yes, market has made a bottom and it is a time to buy. So 89 per dollar should be the rate or below that. Until then, I will be very cautious on this market. And second most important point, I want FIIs to turn positive, which they are not. In fact, earlier, whenever this FII long short ratio went close to this 10% long, 90% short, you used to see huge short covering rally coming on, and you had triggers in market which made that short covering rally. Now for continuous 5-6 months onwards, if you have seen, the short covering rally has never come, and even if it has come, it has been a very short-lived short covering rally, and FIIs are so strongly on the short side of market for a very long time. So for me, keeping all these factors which I have clearly told, till rupee goes below 89 per dollar, until FII starts buying this market, I will definitely be very cautious on this market, and I am putting it very, very clear. But this is only for a short-term trader. However, if you are a long-term investor, use all this beautiful opportunity to build a great portfolio, and you have lot of sectors and stocks where you have choice. And let me tell you, I will discuss some of those sectors and stocks for you. For example, look at metals, how beautifully they are shining, and especially in that copper as well as aluminium. Look at stocks like Hindalco, Vedanta, National Aluminium, and even for that matter, look at Hind Zinc, because silver is now back to all-time highs, and Hind Zinc has to definitely do good. Look at Hind Copper. So for me, specifically copper, aluminium, silver, all these will shine much better. Even many a times in your previous shows, I have told metals will shine better than gold. And yes, copper and aluminium I am very, very bullish. And a lot of stock names which I have given to you in copper and in aluminium as a theme, yes, these stocks look very attractive even at current market price. But if you are a very short-term trader, number one, I said 89 per dollar or below has to happen in rupee. Second, I want FIIs to turn positive, which they are not as of now. And most important, if Nifty spot breaks 25,700, I repeat, if Nifty spot breaks 25,700, yes, for short term, there will be more panic in the market. Already MTF selling has started, and this trigger is there now for last 3-4 days, and it has not ended yet. So for me, yes, MTF selling which is there is yet to get over. And if Nifty breaks 25,700, you will see more sharper fall. So have that 25,700 as the last leg of stop loss if you are a short-term trader. And for Bank Nifty, it is 58,500. So 58,500 on Bank Nifty is the Lakshman Rekha, and on Nifty it is 25,700. And I am very, very cautious on the market. If you are a short-term trader, have lesser leverage, number one. Number two, go with low beta stocks, don't go with high beta stocks. Number three, have hedge for all your long positions. Hedging is a must at this point of time. And number 4, reduce your entire leverage, reduce your entire long positions, stay in low beta, stay in safe stocks. And this is not the time to take heavy leverage. Bet on momentum stocks, and especially where valuation is a concern, those are areas where you have to stay away. So high valuation stocks, get out. Momentum stocks, get out. Go into stocks where you have value as well as growth. Be very stock specific, and low beta versus high beta is the call for the day. And if 25,700 breaks, and it is more likely to do that, I am saying for very short term, these are not good signs. So let rupee come below 89 per dollar, let FII turn bullish, and only one more event to pass on is the Fed rate cut. And even if that happens, I am not surprised market might just give one day of a pull up, and then again it will start moving on the downward direction. So this is the time to stay with low beta, time to have hedge on your portfolio, time to reduce leverage, and time to be very, very cautious. And let me make the last statement, Sakshi. Survival is very, very important. If you are in the squeeze, runs will come automatic. So you have to save your wicket. And when the pitch condition is very strong or it is not good for a batsman, it is time for you to stay cautious, leave a lot of balls which are going outside your stump, and you have to save your wicket, because when the next bull market comes, you should have bullets to fire. If you lose all your bullets right now, and when the next bull market comes, you don't have any bullets to fire, that will be the worst situation to be in. So this is the time to survive. This is not the time to make money in market, but this is the time to protect the capital what you have.
Time to protect the capital, what you have into the markets. Cautious view on the markets in case 25,700 breaks. There could be more pain in the offing, so protect your capital. Be cautious at this point in time. Not every day in the market or every week in the market is to be used to make money, but to protect capital as well, is the clear view that Rudra has shared with all of you right now. We have a lot of questions that are coming in for you, Rudra, so we'll start taking some questions. We have a question coming in from Nancy. She says, good afternoon Sakshi and good afternoon Rudra sir. I need your Keemti view on Adani Ports. I have this stock at 1520 in my portfolio. What would you advise?
See, for me, Adani group of stocks come into that high momentum kind of a group. And yes, specifically on chart, if you see, there is a breakout above levels of 1480. So at current market price, if you are buying or if you already have it and if you are holding it, keep a strict stop loss of 1480 on closing basis and then hold on to Adani Port.
Okay. Vinod Chaudhary says, good afternoon sir. Can you please suggest if I can book my 30%, 35% profit that I've already made in Shriram Finance in the last 4 months? I want to have some cash in this volatility.
Sakshi, definitely yes. Shriram Finance has given a fabulous return in last 2-3 months. That has been one F&O stock which has outperformed any other stock. It has moved like a mid-cap stock in an F&O market. So this is time definitely to, yes, go ahead and book profits in Shriram Finance. And yes, there has been rumors of Mitsubishi taking stake on Shriram Finance and all that stuff. And that is the reason why this stock went up so much from 700 to 840 level. Time definitely to book profits in it and encash that profit and put it into your bank account.
Okay. Next, we have Namish writing in, says, I'm a big fan of Business Today channel. Thank you so much, Namish, for writing in such appreciative words. The question he wants to know is on Aris Infra. He says, I bought this stock at 150. What is the exit level that I should keep for myself on Aris Infra?
Sakshi, Aris Infra, if I have to look specifically onto the chart pattern and the way this stock is just moving, so for me, this is not a stock to have in one's portfolio. So I would definitely recommend an exit from this counter and move into a something better stock unless you understand that company more deeper and fundamentally you know about it, or else I will definitely give a pass.
Okay. Let's take the next question, and this one is from Raju Tiwari. He says, sir, can you please advise any potential downside on Action Construction Equipment that I should be aware of?
Okay, so if I have to specifically see the chart of Action Construction, again, clear downward trend, and the last support which this stock had was at around 930, and right now it is trading below 930. And for me, if this stock closes below 900, yes, further move on the downside will come. I know this is a stock which has created huge wealth to people, and I remember this stock was once upon a time when I was tracking it so close, it was at around the 200 level. From 200, this stock non-stop went to levels closer to 1700. So this stock has been a great wealth creator for people who identified it much early, and now from those levels of 1300 it has already corrected to now levels below 930. So what I would advocate is have a stop loss of 900 for action construction if you are holding. I won't advocate any fresh buying. If you have only bought it earlier and if you are holding it, then hold it with a stop loss of 900. Fresh buying definitely not advised. And below 930 for short term, it definitely shows more pain.
Noted. Let's take the next question. This one is from Sri Lakshmi Narayana Hardware. He says, Namaste Sakshi ji, I am Raja Rao from Machilipatnam, Andhra Pradesh. Okay, maybe the name is different. So he says, I'm holding Tata Chemicals at 942. What should I do?
Sakshi, when it comes to Tata Chemical as a stock, yes, first of all, the space itself, the sector itself is in a clear downtrend, and in that Tata Chemical has been hugely underperforming. This stock, if you see the chart pattern, it is like a swing on the downside. From 1000 rupees, stock has non-stop come to 750 levels now. So if you have already bought Tata Chemical and if you are holding this stock, and the stock has now the last support at 750, if it trades and closes below 750, hell will break out loose on this counter. No buying fresh whatsoever. If you have the stock, 750 should be the last stop loss. You will keep it on a closing basis. See, unless you are an intraday trader, then stop losses have to be kept on intraday basis. If it is a positional trade or a positional investment call, always look at stop loss on a closing basis. So if Tata Chemical closes below 750, it's a time to exit. If you have it with you, hold on with that last stop loss, and definitely no fresh buying at current level also.
So take another question. This is from Ratna. He says, good afternoon Sakshi, I want to know, can I add Indigo at in my portfolio at these levels? Well, that's a good question. In fact, Rudra ji, you have been one of the biggest voices when you've talked about Indigo very bullishly. This entire last 1 week, 10 days have turned out to be extremely testing one for Indigo as a company. They have faced extreme operational failures that has led to the government also intervening, giving them an extension to follow the new rules that they had set itself into place. There might be penalties that will be coming in their way. The stock has fallen about 17-18% over the last 1 week, 8 days. But now the company says they are now in a stabilized situations. Now the company is saying that they believe their operations will soon be back on track. How would you look at Indigo at this stage? It's slipped below the 4900 mark, down by 2.6 odd percent. Would you still be a big bullish voice on Indigo at this stage?
Sakshi, fabulous. In fact, I was waiting for a question on Indigo so that I will give you my views.
Yeah.
Point number one, there is no stock in this whole world where you can hold it for eternal period, because changes happen, and especially when a regulatory change happen in a particular sector, nothing can be done whether you hold a great company in that sector or not. See, for example, if there is some thing which happens in metals for that matter, or something happens in, let us say, aviation as a sector, or government takes a decision, or regulator, for example, you have seen always, okay, we will now take off all the weekly expiries, and then you would have seen all the capital market stocks coming down. So this regulatory risk is always there in some of the sectors, and in that definitely Indigo is also one of them. And let me make a very clear view as of today, as of this second on Indigo. As of now, from 1800 levels non-stop I was recommending Indigo, and it went to levels closer to 6000. Even at current market price, after all the fall at 4850, still lot of money Indigo has made in no time. We are only seeing the fall from the top, but we have not seen the rise what it has given from the bottom. So for me, it has been a huge wealth creator. It is not a wealth destroyer but a wealth creator stock going on in a very tight regulatory scenario where there is a problem for short term. And let me give a very clear comparison. When you had Nestle also in similar situation where people were talking about lead in Maggie, and Nestle will fall to zero and all that stuff. I still remember Nestle came to 3,000, 2,500 rupee at that point of time when it had that particular crisis, and that was a fall of close to 40-50% from the top for Nestle, and this stock corrected and gave a fantastic buying opportunity at that point of time. Don't see today's Nestle price and say that okay, it is below that. There is a lot of corporate announcement in
Yes.
terms of stock split, bonus and all that stuff, but Nestle from those levels of 3,000 rupee went to 20,000 rupee later, and it was a huge wealth creator. So what one has to understand with this even comparison on Nestle, what I gave to you was, see, the problem in Indigo is a larger stock in a sector. Indigo has 65% market share. Now let us say Idea has some problem in, let us say Vodafone Idea having some problem in telecom. Vodafone Idea is not the leader in telecom. I will not bet my money at 10 rupees on Vodafone Idea, even though I am sure it might go to 20 rupee, 30 rupee, because at once upon a time, Idea or your Indigo, your Vodafone Idea was at around 120 rupees. From 120 rupees, stock has come to 10 rupees, and it has destroyed 95% of people's wealth. From 10 rupees Idea moving to 20 rupee for me is still not a wealth creator, even though it is 100% return. So the difference between Idea and Indigo and Nestle, you have to understand, Idea is not the leader in telecom sector. I won't bet on Idea at 10 rupees, even though I feel it can go to 20 rupee. But when it comes to Nestle, when it comes to Indigo, in that sector they are the leader. And when this type of crisis comes, you are getting the stock at a very, very mouth-watering price to buy. So what I will say, only for long-term investor, Indigo is a great buy, but don't buy now. Wait for it to dip to 4,500, 4,400, or accumulate it in piecemeal. For example, you want to buy 100 shares of Indigo, buy 10, 20 shares right now, another 200 rupee fall, buy another 10, 20 share. So like that in piecemeal you have to accumulate, and only if you have a longer time horizon of at least 1 to 2 years, then only get into Indigo. If you are a short term F&O kind of a trader, this is a stock not to trade now because of too many news flows around. So I have put my neck out and clearly explained that this is not Idea, this is Indigo. It is similar to Nestle, what happened when that was the giant or a leader in that particular sector. So for long-term investor, every dip has to be accumulated in piecemeal. As a short-term trader, if you have Indigo, definitely you have to exit.
Okay, fair point. All right, on that note, I think we have to wrap up the show. Thank you so much, Rudra, for being with us on the program and, of course, guiding all our viewers all through the opportunities in the market and, of course, solving their queries, helping us with your view on Indigo, which is in a turbulent phase right now, and how to look forward to the company's performance going forward from here. Always a pleasure to have you with us. Thank you so much.
Thank you, Sakshi.
All right, viewers, the Nifty is trading about 56 points lower in trade at 25,783. So we've slipped below the 25,800 mark. We're down at the day's low point, but let's see whether things turn out to be positive in the second half of trade. Stay tuned with us as we will continue to watch out for how the markets are trading for you throughout the course of the day. And of course, I'll be back for the closing edition. Don't miss out on that one too at 3 p.m.